year of 2000.
Now, Stanbic Bank has reported a 7.1 billion shilling profit after tax in the first half of 2023, up from 4.8 billion shillings reported same period last year. Now, during the period, the bank's revenue grew by 38% to stand at 21 billion shillings, up from 15.2 billion reported in the same period last year. Jimmy Mbogo spoke to the bank CEO, Joshua Wegara, about the interest volatility and its impact to the banking sector, as well as how banks are adapting to risk-based pricing. Jimmy, good afternoon. Tell us more.
Well, indeed, a very good afternoon to you too, Nyakundi. As you rightfully said, we're talking about the big number. That is 47% growth, that is profit after tax for the first year of 2023 for Stanbic Bank. And of course, we'll be telling you later on how that number came to be. And of course, issues to do with NPLs. Their NPLs are currently way below the industry NPLs at 9.2% compared to about 15%. And of course, SME is still a key sector of growth for the bank, with about 22 billion being issued to that particular sector. But I'm joined by Joshua Wegara, the CEO for Stanbic, just to be able to go through one of the big conversations within the banking industry is the question of interest rates. Joshua, thank you so much for making time to speak to KTN. So first things first, within the banking sector, the big conversation at the moment is around interest rates and the rising numbers that we are currently seeing. Maybe you can help us understand what is happening in that space and why are we seeing these rates going as high as we are seeing them now?
Thank you very much for the question. So, first, globally, we've seen a lot of changes in the overall economic environment, especially the macros, your inflations, your interest rates. So in a way, what you're seeing in your mature markets, if you're talking about the United States or the UK or even the Eurozone areas. So we're seeing that happening. And I think it's because of the major kind of shocks we've seen over the past few years. So we're not an exception in our markets. So the response is to deal with your increased, foreign currency inflations, right? Or increased interest rates in that market. And so we are just responding. And that response will also help us address bigger issues like inflation that we've seen in our markets, address some of the issues we've seen about the weakness of our currencies as well in the market. And so with the central bank making those actions, banks respond to be able to implement those actions which have been made by our regulators in various markets. So am I concerned about, it's a short-term pain, but I think if you look at the regional economies, that pain then enables us to stabilize the short-term effects of inflation in our markets.
All right, now and I'm sure this is something that we've been hearing a lot from customers, and they're saying that they're expecting to now starting repaying their loans at a higher interest rate. Correct. Maybe you can you could tell us from where you sit at Stanbic, correct, what are some of the particular types of loans, correct, that are experiencing these hikes in increasing rates? So
we actually want to be more proactive in engaging our clients, and we have a good experience. If you remember, there was a similar crisis brought by COVID-19. It was not interest rates, but it was around the shift of business. So what we've done proactively is to engage our clients before, whether it's our, retail customers or personal banking clients, our SMEs and micro enterprises, commercial enterprises, just to say, okay, what can we do? There are some who will meet their obligations, right? So we are okay with that. And how do we support them in the process? So is it an extended period to make repayment, keeping their current repayment the way it is today, or adjusting a new payment plan for themselves as we move forward? So the issue is to find the sweet spot between the bank and clients to make an agreement. And in the last 1 or 2 months, we've been engaging our clients to support them. So overall, finally, I want to assure you that we'll stand, not just for Stanbic, but an industry to support our clients through this kind of crisis, because it's not permanent. It will pass through. And we like to stand firm the way we stood before to support our clients during this period. So I think the biggest pain will be our retail banking clients, because there are also other double shocks. There's new tax regimes coming through in addition with increased interest rates.
Yeah. Of course, with the volatile interest rates, we are likely to see changes in terms of consumer behaviors. Correct. Have you seen that have you seen any kind of change with regards to as far as consumer behavior goes and access to credit, and particularly when you look at the SME sector?
Of course. So we'll have some challenges for sure. This is something that customers adjust. It's very agile today. So in terms of our loan growth today, which is today at 12%, we do expect that will taper off as we go into the second half of the year. Because people are readjusting. We see some customers repaying their facilities, correct? Because they are modeling their own expenditure and their own cash flow projections. We're also seeing that individual clients are coming back to say, can I refinance my existing facilities? But overall, we still, if you ask me for the end of the year, we still have a double-digit growth in our loans this year compared to last year. So it will not be as significant for the rest of the year.
The concern, of course, that we are speaking to some of the experts within the banking sector, and the concern at the moment is that we are likely to see banks slip back to pre-rate cap interest, and that is quite causing a bit of jitters within the market. Is that something that you would be concerned about?
Not at all, actually. I mean, that's maybe no one has understood the framework for risk-based pricing. This is it's not a Kenyan-specific issue, actually. If you look at mature markets, especially in the United Kingdom and the United States, and even in South Africa, this has been a very transparent model of pricing ever. So you know what your basis for your costing is, right? Then you know exactly what is your risk profile as a client. These are the only two things you need to be able to see. And therefore, there is no chance for banks, and also there's a range that banks, like for us, we can price customers up to 19%. Yeah, remember, that was not there before. So that transparency and regime, the corridors that we have, gives customers ability to move around. Remember, not all banks have approvals yet, but customers then have flexibility to move from one place to the other based on their own credit profile. So I think we've moved away completely from the old model where we didn't have transparency, we didn't have visibility from clients what they have. And then let me say finally, that the question you raise is because globally we have got macroeconomic challenges in mature economies. This is important to always remind clients that Kenya doesn't live in an environment which is locked out from the shocks globally. So as those ease, then the questions about these high interest rates will be able. Remember, more than 18 months ago, in the US, interest rates were below 2.5–3%. Now interest rates were higher, beyond 5.25%. That is more than 100%. That translates into our markets where we are, and therefore you're seeing this impact from our own interest rates. But I'm confident that the worry that you have, that regime has passed. We have new transparency, we have new accountabilities, and therefore banks support the transparency for pricing for clients. So I don't see that risk myself going forward.
All right, thanks so much, Joshua, and of course, always a good conversation with you. And of course, there you have it, Nyakundi. We'll be giving you more details in terms of what else transpired and just breaking down those numbers for our viewers, just to help them understand why Stanbic is posting the numbers that we are currently seeing. And of course, the bank also putting in place strategies to make sure that they come within the middle area, that is the top 3 banks in the country. Will that happen? When will that happen? Of course, we'll be following that story, and we'll be here when it happens. Of course, for now, back to you.
All right, Jimmy, thank you for that. Now we move on to President William Ruto last week announced a